It is after hours on Thursday, May 25th, 2017. Account value is 118k and a little something. I am no longer in cash. Today I bought 1500 shares of JDust, the leveraged inverse ETF on junior gold miners. In other words, I am short GDXJ. I paid $79.50 for it. The position is slightly red by 390 bucks. Today I want to talk about big picture stuff, mainstream media, and perception of reality. Because it is in this environment incredibly hard to have a bearish stance on gold or gold miners. Everybody wants to be long JNUG because in this terrible world where the economy is in the gutter, we have a crazy president, we have a Fed that has been printing money and is now trying to get the foot off the pedal. There is only one way where gold can go, and that is up, and that's why miners must go up. The problem with that picture is that is not reality. And yesterday I mentioned how the Fed is the last to know when the economy is accelerating or decelerating, just because they don't understand how to analyze data, because they never had to do it for a living. They're all, like academics, really smart people, but they are miseducated. And the same is true for mainstream media and most of the pundits on TV. They just don't understand how to analyze data properly, and that is why they come to these flawed conclusions. If we analyze economic data on a year-over-year basis, it is evident that the economy is accelerating. And if we look back, step back and look at the big picture, the market is clearly telling us that. The market is not that stupid. We would not rally the way we are rallying. Tech would not behave the way it's behaving if everything were so bad. So the problem is the media is so negative that it messes up our mindset that we cannot see the truth. And the truth is the economy is fine, actually getting better going into the second half of the year. And as long as that is the case, stocks are very unlikely to sell off. And gold is very unlikely to rally, especially miners, because miners are way more receptive to changes in economic behavior. Let's focus on our two charts here. I have GLD on the left, GDXJ, junior gold miners, on the right. These two charts could not tell a more different story. Gold is zigzagging higher, while miners are just tanking. And I mention quite frequently how important it is to look at relative strength, relative weakness of miners versus gold in order to predict where gold is going. And if we just look at recent history, whenever gold was ready to move in the direction where miners wanted to move to begin with, that is when miners really took it on the chin. And that happened here after gold ran out of gas here, was ready to reverse. This is all what it took to start this avalanche of selling, and the exact same thing happened here when there was no more buyers in gold here and it gave in. That is when this selling started. And I believe we are just about to see the same thing here, that whenever gold is ready to say, okay, this is it, my next move is lower, that is when we see the real tankage in GDXJ. And that is the reason why I'm long JDust. And how long am I going to be in that position? Plan is to stay in JDust, and I might trade in and out, but I think the duration of this trade is until mid-June, maybe beginning of June. On June 14th, we are going to see the rate hike. June 17th is when the rebalancing of GDXJ is done. I would expect that miners will probably bottom before that. So maybe around June 10th or so. But it also depends on price action. Obviously, I want GDXJ to take out 30-ish, and then I want to see how it behaves when it gets to 28, 27. But if it does get there, I'm pretty sure I'll be out of JDust already and then reassessing the situation. But to come back to the beginning of the story, the mainstream media, everything that we are that influences our mindset, what the Fed is saying, what the people on TV are saying, what we read in the news, it is so negative that we just perceive there is no way that gold could potentially sell off. There is no way miners go lower. Let's go all in and buy JNUC. The problem is these people will get hurt over and over and over again because the mainstream media is not telling the truth. They don't do it on purpose, though. It is not that they have an agenda to make things look bad. It is just they don't know better, and human mind is slow to react. Right? We all have this 2008 financial crisis mindset still in the back of our head, and because of that, we think the next crisis is just around the corner. I mean, don't get me wrong. I don't think everything is sunshine, reggae, Ibiza. I'm not some permaball. But as long as the economy is accelerating, and it clearly is, the data is telling us that, the market is very unlikely to sell off. Gold is very unlikely to rally. So for the time being, JDust is the play. We might play for a bounce if we do test this December low here. I'm pretty sure that we will see buyers come in at some point, and then I'm going to flip-flop over to JNUC. But for the time being, I want to be short miners via JDust. And if the economy gives me indication that it is ready to roll over and there is some weakness to detect, I will become the biggest bear out there, because I see that valuations are high and all that stuff that is being reported. But I don't think that is going to happen in Q2. I don't think it's going to happen in Q3. And we don't have enough data to know what is going to happen in Q4. But for now, I think the risk is to the upside. Market will probably go higher. Tech will probably go even higher. Gold going lower. That's it for the Rampage for today. I'll be back tomorrow with another recap.